You're watching a recap from Investor XP, the show that covers investing for gamers. Check out the video description for details. It is Thursday, May 25th, and we got a great show for you today coming up. We are looking at Momo dropping, Chinese, basically they are the equivalent of Snapchat. We're going to look at investing in companies at the startup level. Best Buy is taking off today. And we're going to continue with our food stocks, check out what pick that is. And some indie games are coming out tomorrow. We're going to take a look at those. So all of those are going to be individual videos posted up on YouTube today. And that's what we got coming up if you're watching live. So let's go ahead and jump right in. Food stock for gamer pick of the day is, we're going with a safe one here, McDonald's. McDonald's is a great stock to own. They've had a huge run-up lately, so we're going to take a look at them. This week so far, we've looked at things like Texas Roadhouse, Kellogg's, Nestle's, trying to find a decent food stock to invest in to diversify the kids' portfolio. McDonald's is a doozy. They have made a great transformation, great turnaround. As they add healthier things to the menu, they are surviving and actually thriving now. So let's pull up. Let's start with their stock. Let's just start it with their stock. Take a quick overview look at what their stock has to offer here. Very good dividend. They've been around forever. If we look, let's see here. Let's pull this out. We don't need Fox News up there. They're a stock that's just gone up and up and up and up. Certainly over the last 6 months, they were kind of sideways for a little bit. In the last 6 months, they've really ratcheted it up here. They had this little time period here, sort of flat, and they've had this big bump and they've kept going. So, statistic wise, 26 times earnings. A little more expensive than the average. Okay dividend yield, 2.5%. They are a global grower, and they've got some free cash flow in the billions. They got a decent amount of debt because of their real estate and stuff like that, so it's to be expected. Year-over-year growth, 8%. $2.4 billion in cash. It's okay amount of cash. We like to see more cash than debt if we're really being greedy about how a company's structured, but some of them like this, they can't be structured that way. $6 billion free cash flow. That'll be good to keep the dividend going, certainly. So pretty solid. McDonald's has always been a pretty solid company in that respect. Their menu item is getting better. They listen to what people have, and they always got the McRib to pull out whenever they want to make a cash grab. So they got that play going on. Let's take a look at their investor relations. And they lay out some decent strategy over there. We're going to put the link in the description below the video to go over there. There's a couple of things I wanted to pull up from their investors page. The letter to the shareholders in 2017 with the new CEO talking about the turnaround. One of the things that jumped out here was building the brand. Here we go. Here's his. They want to retain the customer base, and they want to convert the casual customers with a greater emphasis on coffee, snacks, and treats. So they have a strategy to kind of get your coffee drinkers that don't want to walk into Starbucks to get in there. So retain their customer base, family occasions, and doing the breakfast. Regain with better food quality. So we're not talking about a elaborate plan that he's got there. Basic, solid common sense of what to do to retain customers. Now, Here's their global growth plan. Again, this will be in there. This is where it gets interesting, where they talk about the use of technology, using that for customers to expand their operating margin and stuff like that. Um, there's their, the three things that was kind of outlined um, in his letter earlier on, obviously. Um, but they have a whole section on using technology to understand their customers better, and this is a big thing for all major companies now. Domino's did it very well, and if you look at their stock, it has gone through the roof. So we like their strategy there. Here's their goal: is to grow the system sales. Oops, get a better highlighter there. System-wide sales grow 3 to 5%. Uh, Grow on the operating margins and return capital target 20% from the teams. So they're looking to continue to grow and grow fairly aggressively, um, using more insights from technology. Um, One of the most significant disruptions in the restaurant business today is rapid increase to delivery. So they want to get in on that. Uh, so boy, McDonald's doing some sort of delivery, um, or making it even quicker, more convenient to get your food. Order ahead type of thing with apps and technology. Boy, there, hold on, there it is. There, mobile order and pay through McDonald's app. Ooh, skipping the drive-through line, and just get your curbside delivery. So that is that's pretty exciting as a McDonald's investor to look at that type of thing. Um, I I prefer other fast food companies to them. I honestly, I don't eat a lot of fast food, but um, almost there's a bunch of them with way better burgers and stuff. I haven't tried their new ones. I'll give McDonald's a chance on that, but they are a staple. They pay a great dividend. Their growth is going to come much slower globally. Whereas Texas Roadhouse, they have a lot of locations, but they have more room to expand. When you investing in restaurants, you want something that has room to expand, or they have a sound strategy like McDonald's, where they will get some global growth, but working on their profit margins, things like that, and new ways to get customers in there. Their plan is pretty sound, with using apps and things like that. So really like that. Lingering thing over them is the minimum wage hikes and people calling for that. That could impact their margins, as that gets in the news and things like that. Um, I can see protests and news articles about that driving the stock down a little bit. You could see people panicking, dropping that down. If minimum wage hikes do get passed through, you could see McDonald's stock taking a beating. But if you look at it, if they're trying to increase their margin with technology and different things, they'll get there, even if these hikes get in by hook or by crook. Worst case scenario, it'll be stagnant and you collect the dividends. So, liking McDonald's, they've probably jumped ahead of Texas Roadhouse this week, as a potential food stock for us to invest in to diversify our portfolio. Let me know what you think of McDonald's as a pick. I'm not going to say we're loving it, but interesting. We like what we see. We like their strategy. Um, they may win out this week. We still got one more day to go for food pick stocks. Let me know if you got any food stocks that are picks that you're interested in. Um, That's it for today's show. Thanks for watching. You can contact the show. Info's behind me on the screen. Shoot us an email, tweet us. Check out our website, investorxp.com. Join us each day, Monday through Friday. We're live, 1:30 Eastern, 12:30 Central, talking about investing for gamers. So thank you for all the subs we've been getting lately. Really appreciate the subscriptions. If you haven't subscribed, subscribe so you get the latest investing news for gamers. Give us a thumbs up, leave us some feedback, trying to grow the channel. Really appreciate the people who watch live and all the people that check out our channel as we post them up on YouTube with the videos. So thanks for watching, and we will see you tomorrow.